All right, let's do this. Metals, markets, and money. Your post-market update for Friday, March 20th, 2020. Gold, let's start off with gold here. Now, gold just shot up in the past half hour to almost 1,500. Prior to that, it went up overnight, I believe, in the European markets. And then as soon as the U.S. markets hit, it decided to go silent and basically had very, very little volatility throughout most of the day. Very, very small move. It peaked at 15-ish and then bottomed out at 1480. So you're talking about a 35 $35 range here, which is pretty small considering all the volatility going on everywhere else. So it was an options expiry day. I don't know if that tried to keep things in check. Just not sure. Let's take a quick peek at silver. Silver had a really nice day. Again, it too shot up in the last half hour after the markets closed. So obviously, people trading options didn't get a chance to capitalize on that move, but nevertheless, silver had a very nice day, 1261. Let's take a look at the Dow and the other markets. Let's take a quick peek at the Dow first. It was hovering right around the open here for the longest time. Towards the end of the day, and then in the last hour, it finally gave up the ghost and slid down. I would not want to be short this market over the weekend, especially this weekend. The news has been coming out hard and fast, and I just can't even imagine there being any good news to lift this market, although it probably will end up going up on Monday for some ungodly reason. There's really no fundamental reason for this market to go up right now. Nevertheless, let's take a peek at, what did we do here? Oh, Bitcoin. I don't usually look at Bitcoin. I don't follow Bitcoin too much, guys. Sorry about that. I do take a look at it and see what it's doing from time to time, just out of curiosity. The U.S. dollar, once again, comes up to 102.43. It's been as high as 102.98 this week. You will, again, I think you'll see that keep going up. I think we're going to have a blow-off top here before the you-know-what hits the fan. And all this printing brings on the aha moment that we know is coming. Quick check at the other markets real quick here. So we saw the Dow. This is really delayed here. I'm not sure. Oh no, I'm sorry. This isn't delayed. This NetDania has a different market day than goldprice.com. So these are a little different. At the end, you're going to see the number here, but the amount down could look different. So all the markets were down. The DAX was up slightly, Nikkei down, Shanghai up, UK down big. Hong Kong was up pretty big, and there are your other markets. Oil was down. Oil, WTI also saw a significant down today. It kind of surprised me. I thought it might hold kind of tough. Where's WTI? Why did it disappear on me? Oh, there it is. 23.52. I really didn't think that it was going to. I thought 25 would probably hold it, but it didn't. So there's still some selling. I mean, you've got Russia and Saudi Arabia flooding the market, and that along with the declined usage of fuel, obviously, for all the traveling going down. The demand is way down for this stuff. So, I mean, yeah, I mean, you could see this stuff hover around $20 for a while. Who knows? Hard to say, but you know how oil is. Anything could happen. It could bounce right back up. So let's take a look at the rates here real quick. The 10-year was down to 85.85, which is under 1% again. So it's dropped pretty significantly. There's your chart. This page just hates me. I apologize. This just doesn't. There's your chart for today. So we dropped under 1.85, lost about 30 basis points. Let's just take a real quick look at all the rates. There's your 3-month, 6, 12, 2-year, 5-year, 10-year, and 30. 30 dropped down to 1.42. So you're gonna seeing some strength in the Treasury market with the yields dropping. People are going into Treasuries, and that is probably because I don't remember what the title of that. Even with all of these bailouts, you're still seeing weakness in this market. All the stuff that we did back in 09 and 2010 and everything to juice these markets isn't working now. So, we're hovering around 19,000, down 10,000 points from the high. I think we could probably still go down to around 14K, which was a major resistance point at the time before it popped. Seemed like stocks stayed between 12,000 and 14,000 for a real long time. That's what I'm remembering as resistance. So I'm sure it will provide some pretty decent support, which is obviously a 50% decline from the high or better. But keep in mind, I read somewhere else that just because these indices are down about 30%, 30 to 35%. A lot of people's portfolios are down 75% because of, they don't necessarily have the same stocks that are in these indices. So, just because you see something in an indice down a certain amount, don't think that automatically that's what you're down in your 401k. It could be different. There was another pretty good piece of news. Oh yeah, companies are just drawing on this kind of line. Yeah, I was seeing Delta's predicting 80% drop in revenue for next month, and I'm telling you, that's devastating. The companies start losing 50, 60, 70, 80% of their revenue. It doesn't even matter if they're paying employees or not. They've got other bills, and like I said before, keep track of this. This is going to be a credit event, okay? I've been saying this since I started this channel a week ago because I want people to keep their eye on this. Okay, this isn't just about gold and silver. It's not just about interest rates. It's not just about markets. It's about a credit event because it is credit that caused this hyperinflation of assets and the distorting of the price of assets and not allowing there to be price discovery on other assets. And this is what happens when the Fed pumps the markets with cheap money. A lot of that money will flow to assets that it shouldn't flow to because people are trying to make a quick buck off of them. Now, you can do your own research, find out what assets those are. But at the end of the day, when things begin to normalize, you're going to see inflation because over the next couple of months, you are going to see $3 or $4 trillion in addition to the normal amount of money hitting our money supply. You're going to see an additional $3 or $4 trillion to that, and there's going to be no real goods attached to those funds. This is the purest definition of inflation. Okay, you need to hedge for inflation, people. You need to get yourself into some physical assets, some physical gold, some physical silver, maybe even property if you can find it. Um, Anything that you could get your hands on that's a physical asset that will hold its value to some degree, I would very seriously consider getting into. I am not a financial advisor. I'm just some jackass behind his computer who's been keeping track of this stuff since around 2004. I started selling machinery from Europe, and the US dollar started going down, and it forced me to start looking into markets and figuring out what's going on here. And so I have been basically studying market activity, metals, currencies, uh, and, interest rates, and all that stuff since around 2004. And I've seen a lot of this stuff unfold, and have watched it unfold, and have learned from a lot of people that are a lot smarter than me, quite frankly. And I've taken their words of wisdom, and I've added my own research on top of it to verify it. And indeed, we are about to have a hyperinflationary event happen to us. It has to, because they are not going to allow this stuff to crash. Anyone that tells you that they are going to let this system just crash in a deflationary crash and leave it that way without trying to pump it up, I think they're wrong. Okay, and I think you need to, at the very least, take another look at what the Fed has done in the past, and take a look at the probabilities. For me, it's more a matter of, I look at the American people. I'm 50 years old. I've been around for a little while. I've studied people. I study behaviors, and I believe that the people in charge must believe that the United States population would easily put up with inflation turning into hyperinflation before they would a collapse. This is my opinion, and so that's why I believe that this inflationary event is going to happen after the credit event strikes. So, at any rate, this is a new channel. Please subscribe, like, share, all those things. If you like it, I'd like to keep doing this. I'd like to have a reason to keep doing this, because the world needs another jackass behind his computer telling you what's going on. Be safe and have a good weekend.